All right, now joining us in studio, one of the most connected guys in the financial planning space, good friend of the show, Matt Rinke with Illumination Wealth. Good to have you on the show, man.
Great to be here, Craig.
So we always have to talk a little bit about the market because I just think it's so interesting, but we're going to go a little bit deeper on a new ruling by the Department of Labor that just recently happened, but the market's volatile again.
Yes, it is. Back at it. It's earnings season now. So stocks, companies are reporting how they've done for the previous quarter, which is already history, but the market reacts to it. And today got kicked off some retail stocks. You know, the consumer spending, not as good as what people, it just hasn't been as good. So that's maybe signaling the economy isn't as strong and the market has reacted not so favorably.
What do you think of the Fed's kind of, and these aren't even my words, but the see as we go stance on interest rates? I'm not sure where I heard that or read it, but it kind of makes sense. It seems like that's how they're approaching this thing because you've heard they're going to raise, there's dissent amongst the Fed members. So what do you think on their policy moving forward with interest rates?
Well, I think they need to be proactive, but they're always so reactionary. So they're always just going to see how it goes. They're forever seeing how things go. And they saw how their last raising of rates went, and they realized that they probably did it too soon. So these guys are just guessing at the end of the day.
That's great.
Yeah, they really are.
The bipartisan Federal Reserve is taking a stab at it.
Yep.
Well, let's talk about this Department of Labor ruling, right? Yeah. So I want to frame this the right way. It's about being a fiduciary. This is a term that probably anyone who's watching has heard, but doesn't necessarily understand what it means. And I see it get slung around so much by people that should not be using it or calling themselves a fiduciary.
That's right.
What does it even mean? Let's start there, and then we'll get to what the ruling is.
For the sake of simplicity, it's just somebody who, by law, has to put your best interests first. By law, has to put your best interests first.
So, okay, that's good.
Yeah, well, here's how it relates.
Shouldn't everyone have to do that?
Everyone should have to do that, but for stockbrokers or investment advisors or investment consultants, insurance agents, they do not and have never had to legally put their clients' best interests first. And most consumers, most investors think that their advisor actually has been putting in their best interests first.
So if you ask your advisor, are you a fiduciary?
Yes.
And they said no. It basically means I don't legally have to put your interest first. Now, it doesn't mean that I don't necessarily, but it means I don't have to.
It means they don't have to, and they're usually incentivized to not put their best interest first, because their best interests are to make a profit for their company, not to help you keep more money in your pocket.
And I'm fine with profit, but is that profit, do you see from being an insider on this, do you see that people are steering still in this market after all these rules and regulations? Does that still happen?
Oh, absolutely. And this rule, it was just kind of like a compromise, this recent rule. So basically...
So the Department of Labor now has made this new ruling on fiduciaries.
Yeah, so basically it only affects 401k plans and IRAs, retirement money, which is some of the money out there, but they can still not be a fiduciary on your taxable money or steer you to really crappy investment products or non-traded REITs or expensive annuities in your non-retirement money. And it doesn't even apply to like teachers who have 403Bs or nurses who work through UCSD system. Their advisors don't need to treat that retirement plan asset as if they are looking out for their client's best interest.
So what would you say if you're going to empower a consumer today that's watching this show and wants just to, look, I work hard for my money. I pull some money on my pay stub, put in my 401k a little bit at a time. I try and save some money here. Got a kid going to college. Look, I'm too focused on being an engineer or an attorney or a teacher or a stay-at-home mom. What's the best advice you could give to someone who wants to hand this over to a financial advisor so they can go get back to doing what they do, right?
Yeah, that's a great question. And to me, people can spend a couple minutes to figure this out. And there's a few questions that they could ask the advisor first. I even have a little guide that I'm happy to send anybody.
The guide.
It's like choosing an advisor. Here's some questions that you can have any advisor ask.
Slide that my way here. But go ahead and rattle off a couple things.
Yeah, well, the question is, well, how are you compensated? Are you compensated by commission? Are you compensated on a flat fee? How are you paid? Are you incentivized to sell me products?
So that's a fair question. I think that's an uncomfortable question for some people, maybe because maybe they were referred to someone that's a family friend. But is that if you're on the receiving end of that question, is that uncomfortable?
Not at all. It's perfectly normal.
How do you get paid?
Yeah, how do you get paid? The simple way is, hey, my client is the only person that pays me. No mutual fund company, no other company. It's strictly coming from my client.
Now, if it was coming from those companies, is that okay?
Typically, they're incentivized then to sell them a certain product if it's being a kickback from a mutual fund or from an insurance company. So it's not necessarily going to be okay for their financial health.
Let let me kind of go off course a little bit and put you on the spot. There's been all this financial regulation.
Yep.
A lot of it has strangled some good guys. The Dodd-Frank, RESPA, TILA. I mean, I can't even keep up with all these acronyms. Have any of them, it seems like the fiduciary one, it seems like some of the things that would be the obvious things are untouched, and some of the things that are strangling good guys are a little overreaching. I mean, is that fair?
Yeah, I haven't seen so much overreach in this fiduciary rule.
Okay.
I guess there's still so much room for improvement, which is like amazing. Like the rule doesn't even go in effect for another year. They can still sell these commission products. It leaves out most of the money. So I would say there's still so much room for improvement, and that's these financial service powerhouse lobby that has got them to this, iffy,
troubling.
sketchy.
What other questions, though, should you ask your advisor? So, how do you make your money? What's another good one?
How do you make your money? Are you willing to sign in writing that you are a fiduciary? What do you do for your
They don't
continuing
have
education?
something they can show you.
What are the specific fees that I've actually paid on my investment account? So many of my new clients come to me, I ask them, they ask their former advisors. It's the murkiest, unclear answer ever, and they're not willing to say it.
Funny
it's
as you came into the studio today, I said, my back's been bothering me.
Yeah.
I would never get an MRI on my back because I don't even want to know, right? It's like, I don't even want to know. Is there something wrong back there? The idea that I might have to ever have back surgery, which I don't think I'm that bad. I wonder if people just don't want to know because they're scared to ask the question, or they just kick the can down the road.
Yeah, perhaps if it's a relationship, like they're friends, but any friend, if they're actually looking out for you, should be able to tell you the honest truth. People need good advice. They need transparency. They need no hidden agenda. That's the bottom line. It's your money.
I agree, man. Well, the American Dream, we're here to educate, empower, and engage. That's why we bring Matt Rinke on here. If you have questions about your financial plan, or your planner for that matter, you can take people, right? They can reach out to you.
Anytime.
Illuminationwealth.com. Well, I appreciate you coming on. You always teach us something new. And there's no shortage of content, right? There's either stuff happening in the world with politics, with new laws, and certainly the market is always volatile. It's doing pretty well, though, right? So anyway, Matt Rinke, good to have you on the show, man.
Thank you.
Coming up next, more of the American Dream, teaching you how to win any marketplace. Back here in just a moment.